Hello and welcome to Portfolio Matters. In this episode, we will be covering my worst trade, and it is my turn. And I will be talking about a disastrous Chinese company listed in London called Asian Citrus.
Everything discussed during Portfolio Matters is for informational purposes only. Everything discussed during Portfolio Matters is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show.
Okay, so what did this particular disaster teach me? Well, number one is to listen to short sellers. Richard and I, we do a certain amount of research on each company, but the reality is we hold 50 or 60, maybe more shares in our portfolio, and we do a decent amount of research. What we don't do is spend months on each company, which is exactly what short sellers do. They have to get it right. And if a short seller is interested in your company, that is very bad. Listen to them. They know what they're talking about. So one of the things I do on a regular basis is look at the list of the most shorted shares in London. And in general, they tend to be right. So a few years ago, Carillion was by far the most shorted company in London. And of course, it went bust shortly afterwards.
Yeah. So where do you find that list, Keith?
I will include a link in the notes to this program. It's quite easy to find. Okay, so second, don't rely on auditors or, frankly, AIM itself or the regulators to do your due diligence for you or to do proper due diligence. One of the reasons I bought Asian Citrus was because I looked at the auditor, which was a proper British company, Baker Tilly, and I thought, well, if they've signed off on the accounts, they must be all right. This share, which is trading at 1.5 times earnings, seems absolutely extraordinarily cheap. And if the auditor's done its job, there must be a decent chance of making some money here. Or what is the downside? You know, how much downside can there be to when a company is trading on a P ratio of 1.5?
Of course, Keith, this was also before the days of Patisserie Valerie.
Yes.
And who the auditors gave a clean bill of health to. And Wirecard, actually. So they
yes, absolutely.
They don't have a perfect track record.
Yeah. And what it taught me is that the finance industry has a great deal of incentives to bring all these companies to market. So they make fees from selling these companies to investors, essentially. And if the company goes bust or turns out to be a huge fraud, they don't have to give it back. And nobody actually slaps them on the wrist for this. So in 2016, 45 Chinese companies that had been brought onto the London AIM exchange had either had their shares suspended or been delisted. And I remember listening to an interview with the AIM regulator, so the CEO of AIM, who was saying, well, the fact that all these shares have gone to zero shows that the market has worked. And it has valued these things correctly. I was thinking,
they weren't valued correctly when they were listed, were they?
Well, precisely. So he takes essentially what he's saying is he took no responsibility whatsoever for the fact all these investors had lost all their money. And the other thing which I do from after this trade, and I should emphasize, this trade was absolutely tiny. You know, it was just I thought PE ratio is 1.5. What can go wrong? I'll just put a bit in, see what happens. Beware of companies in jurisdictions with poor legal systems, i.e. if they defraud you in London, is there any comeback on them? In the case of a Chinese company, there is none. They all took the money and ran.
Yeah.
And there's no comeback for them. So I don't buy any shares in companies which in dodgy legal jurisdictions. So I don't buy any Russian companies. And frankly, this year that has cost me a lot because all the Russian gold miners have shot through the roof. But the reality is, if one day they were to turn around and just decide to, disenfranchise all the private investors, I can't see there's anything stopping them.
Just as a brief aside, Keith, where does Mongolia feature on your list of in your hierarchy of good to poor legal systems?
Well, the thing is, in the case of Mongolia, that is their largest foreign investment by a long way. Turquoise.
I didn't care about that then.
Well, the thing is, to be fair to the government of Mongolia, it is way over budget.
Right.
And there are questions about the mine development plan and whether Rio Tinto, who have been developing the mine, have essentially mismanaged it to their own benefit.
Oh, I see.
So
it's more complex.
It's quite complex. And so Mongolia, who have been promised the stream of income, are not getting anything. In the meantime, the company is building up debt, which is cutting into the prospective future payments for Mongolia. So Mongolia is upset. But the bottom line, Richard, is A, you're right, but B, to my mind, that particular instance, the development is so big, there's bargaining power on both sides.
Yeah.
But also, you're fundamentally right. If I try and avoid these, but there are situations where I will dabble.
Yeah.
Okay, so this is the chart of Asian citrus, and it was actually on the London Stock Exchange for a few years, during which it did quite well initially. And what it did was it had a load of citrus farms in China to produce oranges for the growing orange juice market. 1 billion people under provision with this marvelous stuff called orange juice that they've never had before. It's going to be huge. So anyway, as you can see, I bought it when the share price was coming off amidst a flurry of basically negative news about Chinese companies listed in London. And I looked at this one. The website was quite good, and it was audited by Baker Tilly. There'd been some bad news about harvests, etc. And I thought, well, the audit seems to be correct. So when you look for margin of safety, you don't get a much bigger margin of safety than 1.5 times PE. So I bought, frankly, I bought 2 grand's worth.
Right.
And the share price continued to drift off. And there just seemed to be an unending stream of bad news. So bad harvests, blight in the crop, etc., until essentially it drifted down. And like a lot of these things, it was a small position, and I frankly largely forgot about it until I was doing a bit of portfolio cleaning up at the beginning of 2015. And I just thought, this looks really cheap, but I don't understand it. Just get out of it.
Yeah.
And it was close to the end of the tax year. And I thought, actually, this is quite useful as a tax loss.
It's quite interesting case. Just looking at the chart, you can see that there's quite a noticeable head and shoulders. Now, I'm not a chartist, but I think if you look at it, if you look at the chart from the point of view of that, it would make you a little bit wary, perhaps. But I know it's not always easy to see these things at the time.
Right. I shall consult you in future, Richard, whenever I'm buying some dodgy shit. Anyway, so I sold it. And then, so subsequent to the sale, you see that this chart comes to a rather an abrupt end in 2016. So in 2016, 2 employees of Asian Citrus left the company under acrimonious circumstances and essentially sent a letter to the Hong Kong Stock Exchange saying that the whole company was a fraud, and there were 2 sets of books and there were 2 sets of bank accounts, and they had the other set of books which showed that basically there was nothing there.
Oh.
So Q, shares suspended, weirdly, after 4 years, it has come back and is now listed in Hong Kong. And I haven't had a look because I'm not interested.
You're not interested.
So the other thing I'd like to emphasize at this stage, obviously as a private investor, you read the annual report, etc., but you have no great depth of knowledge that is outside the public realm.
Yeah.
So one thing I was relying on was the Investors Chronicle, which I still subscribe to, which is meant to be populated by very experienced financial journalists. And they were tipping it. They were tipping it even when the short sellers were issuing quite detailed reports. And actually, one of the reasons I thought, I'll give this a go, is that they were dismissive of the short seller reports. Now, obviously, I know that if ever there's a conflict between what a short seller says and what the Investors Chronicle says, I'll absolutely 100% take the short seller every single time. But one of the lessons I learned, that is one of the lessons I learned from this, frankly.
I think it's a very interesting lesson, Keith, actually, about the short sellers. It's not a small question mark. It's a really big warning sign.
Absolutely. So anyway, shares drifted down. I honestly think all the bad news was just so that they could kind of slowly reduce investors' expectations prior to, winding up the company and having taken everyone's cash, honestly.
Yeah, all part of a strategy.
Yeah. So the last thing I want to talk about is the regulation of AIM. Okay, so this shows you how AIM is a highly regulated market that you can trust. Like, don't believe a word of it, okay? So when you look at all these regulators who should be looking after your interest on AIM, essentially, in this case, the auditors and the lawyers, I mean, they make money out of the company. We've had an unending series of, frankly, terrible scandals involving auditors recently, Wirecard being particularly egregious.
Yeah.
The SFO, they only get involved if things have gone really badly wrong. And the same with the FCA, so they'll get involved once you've lost all your money, which is actually really not of much use to you. So what you're hopefully aiming for is that the auditors and accountants and the AIM regulators who allow it to be listed in the first place have done a bit of due diligence and ensure that this company is of sufficient quality to be sold to UK investors. And actually what this taught me is, no, don't rely on them at all. Yeah, in particular, don't rely on them to sell you companies in dodgy jurisdictions, because frankly, they haven't done any due diligence.
Yeah. Also, the fact that they're operating two sets of books means that even had you may well have done this, had you looked at their cash flow, for example, you would have been hoodwinked because their cash flow would have been falsified as well. And normally cash flow is a key indicator, particularly for a small company. But if they're operating two sets of books, you don't have a hope.
Yeah, absolutely. So, a private investor, you have to tend to rely on these people. Yeah. And in order for them to do their job, there has to be some downside for them if it goes wrong. And in the case of these Chinese companies, if it's a fraud and they've stolen foreigners' money, I think they get a pat on the back by the government. So anyway,
thank you very much.
There we go.
Thank you very much for telling us about that.
Right, and there were plenty more of these in the portfolio history, Richard.
Yeah,
it's a rich theme to mine. Right. And on that note, thanks for joining us. I'll see you again soon.
Bye-bye.
Bye.
Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.